Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, April 19th, 2024. As always, we'll start with the executive summary from today's leadoff running note. If you would like to review the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So today's key macro events are the muted response to Israel's retaliation, plus sanguine Japanese inflation data. So the nuance there is Israel launched a retaliatory drone strike on Iran, striking a military base near Isfahan, one of several launch sites for last Saturday's attack on Israel. Japan's headline CPI, core CPI, and CPI X fresh food, which is the BOJ's preferred inflation gauge, all decelerated and missed consensus forecasts in March. In terms of market implications, the muted response in asset markets suggests investors are comfortable with the retaliation. You got the S&P and gold flat, Brent crude oil down nearly 1%. It may also suggest a rush to buy downside protection may be nearing its end. Elsewhere, Japanese inflation data reduced the likelihood the BOJ accelerates policy normalization in the near term, which is positive for global liquidity because faster than expected policy normalization in Japan would exacerbate the bullish VAMS breakouts in global fixed income and FX volatility. Lastly, we have an important signal from one of our key quantitative risk management signals. So we'll leave that to our paying subscribers to figure out what to do with that. So we'll wrap it up, just transitioning to our 42 macro dashboard. As always, we'll wrap up with a question from our community. This one's about temporary inflation and war. This is Darius. You've nailed the temporary inflation uptick even way in advance. Was this mostly from oil price increases and Suez Canal war? Is this inflation really going to cool down again in a month or two, as true-flation would suggest? So just on the first part of that question, is the backup that we've seen in reported inflation here in the U.S. Primarily driven by energy price increases? And the reality is definitely not. Obviously, energy price increases. I want to say energy CPI is now running up about 10% 3-month annualized, up from contracting a few months ago. So that certainly has contributed to the acceleration in inflation, but it's not primarily being driven by energy. In fact, when you strip out things like energy, we have core CPI running north of 4% 3-month annualized and accelerating in the most recent months. That's being primarily driven by core services, which is core services X housing. And so that's obviously strips out energy and strips out housing from core CPI. And that number is up 8% on a 3-month annualized basis. And then you look at median CPI, which is the median of all the changes across all the categories in the CPI report. I want to say there's upwards of 400 categories. That number accelerated to 5% 3-month annualized. So we are this is a broad-based backup in inflation. In our opinion, it was very much likely given the easing of financial conditions that we've seen really from let's call it November through March. And so the flip side of that is we've seen a pretty significant backup in interest rates that have already started to weigh on activity in the housing market. We saw that in some of the data this week with the permits and starts. And so if we expect a couple things that could give you some confidence that we should see inflation back off a little bit in the coming months is one, that backup in interest rates and the tightening of financial conditions we're observing here in April. But also there's still a decent amount of shelter disinflation in the pipeline. I've said that I feel like a broken record saying that, but we're kind of getting to the point where it's got to start to happen. And if it does not start to happen, then we're going to have some real issues on our hands from the perspective of sticky inflation getting worse and potentially pulling forward a policy pivot by the Fed and or Treasury and or both. So we'll wrap it up there. Darius Dale presenting our macro minute for Friday, April 19th, 2024. Best of luck out there today. We'll catch you back here next week. Everyone have a wonderful weekend. Cheers.